back to like, I feel like obviously like sometimes over leveraging for sure on my part, but then the only like real spot that I feel that I have issues with sometimes is if I'm staring at it too long, because then I'll like justify.
Both
If I was to
sides.
have it for like 2 hours and like haven't like entered in a trade, it's like everything starts to look good. You can justify everything to like be a potential like decent setup. Like if you're zoomed too far in,
Yeah.
if I'm looking at the 5 minute or
Yeah,
15 minute, oh, this
you
is
got to
really
keep the higher
good.
time frame perspective always.
Yeah, like I gotta stay out at the
Like
the 4 hour.
keep the daily 4 hour, 1 hour like perspective.
Yeah. Or it's like today, another decent entry point. If you missed the New York AM, was like the 10:30
Mm-hmm.
swing point
Off the
on the
5 minute,
on the on the 15 minute.
15 minute. Yeah, that was the trade that I framed.
Oh, okay, okay.
Yeah, yep.
Or again, another good one would have been 11:15,
Yeah, yeah,
hitting that 10 o'clock
yeah.
order block.
Exactly right here. Yeah, because
You're not
but
showing.
this is supporting. Like the only reason we're going up here is because of the higher time frame. Like
Correct. Yeah, yeah, yeah.
because of this, like we're on the buy side of the curve now, because we just hit the internal. Like I was explaining earlier, like we came down sell side of the curve, here, right?
You're not showing.
This
You're
is
not
the.
showing. No,
Oh, I'm not. Oh, okay, hold on.
no. Just run the VC now.
Yeah, my bad.
Oh, good.
Right, so
You gonna record now?
yeah, I'm recording. So this is internal range of the
Yep. Internal to external.
internal of the daily. This is daily, right?
Yep.
So this whole range is internal. If we come down into the internal range, okay, so what's the next logical place that we're gonna go? Well, it's the external up here.
Yep.
External range. And it's creating that U shape, right? So that market maker model. We have the sell side of the curve, buy side of the curve. Okay, well, we're already on this side of the curve. We already made that change of state. We have that SMT here.
Mm-hmm.
So we're just following the narrative here, candle per candle. Your lower time frame is just following that storyline, right? So when I framed this 10 a.m. to 11 here, so it was 10, 11, 12. I had framed it as a buy off of this order block, and I kept the stops down here. And just as a low-hanging fruit for the day, hit a 2R like this.
Mm-hmm.
So the next 2 hours it hit it, right? Or like, how long was this? Yeah, an hour and 15 minutes. The next hour, 15 minutes it hit it, right? So then you would have been done for the day off of this trade if you framed it properly. But it's all about the framing, the higher time frame framing, right? So that's why I go off of the 4 hour candles, because I'm looking for the swings to be formed on the 4 hour candle. So for example, on this day, we're reacting off of the daily order block here. I'll make it thick.
Okay, let me ask you this. All
Yeah.
right, so you're using that the long position thing, right?
Yeah.
Okay. Would you recommend for me, like, all right, boom, I see an order block created. Draw, if let's say we're gonna stick with the longs,
Mm-hmm.
and I'm gonna do it exactly for the that 10 a.m. Order block that was created. Can you go down to the 5 minute?
5 minute. Yep.
Yeah. So let's do this. So.
This order block, yeah.
Oh no! Sorry. 15 minutes. Sorry.
15 minute. Yep. Right here. Same one,
Okay, so 15-minute draw your long position. Would you draw that at the creation of the order block? Would you recommend for me to do this?
Yes.
Have that, like if I'm thinking, have this drawn out, and then when I see a candle or a wick come back down into it, now I know to buy.
Yes. Or you can
And then I would set my stop loss to the bottom of that swing.
yeah. So like you would put that up because this is your general idea of what you're looking for. I want to see reaction off
so I
of
would
this.
have that up before any, like as soon as that bullish candle closed above the bearish one. Not those previous.
This one?
Previous order block. Previous
This-
order block. That one, yeah.
Yeah.
So I draw a long position there, and then as soon as I see a wick come down into the gray area, the gray box, from the long position, I would make it bigger so that it's just like a visual reference of like, yo, don't buy until I see it in my zone.
Yeah.
Count.
Yeah, because you would want your stops to be here, down here, right?
Yep.
So that's your maximum point of like, if it reaches this point, I'm out. Well, if you're framing your 15-minute like this and you keep this as a visual representation, now you can come down to the 1 minute, for example, right? And once we're reaching this area where you're looking to buy, you can look for that shift, for that swing to be formed like this, right? Like you divide in half, right? That's the U shape, sell side of the curve, buy side of the curve. But once we start even making that change of state on at this point, because technically on this candle, there's probably like an SMT at the bottom here too, right? There's probably like an SMT, something took this low, but just for like for the sake of this, I'm gonna say that this is a change of state up here, right? Because if it wasn't, if this one took the low on like ES, you could have used this right here and entered off of this wick when it retested it. So when you're up here and you have your 15-minute idea here, then you could like refine it back down to the entry that you took, right? And you can even like tighten your stops a bit, whatever. Now it's giving you a better R return. Like this is now 3R instead of 2, like an extra R. But if you're aiming for your low-hanging fruit 2R, you can aim here, right? And now you have your trade idea based off of that same 15-minute. Yeah, you have to utilize this. Because this, right, same thing, right? Like let's say you want to consistently risk, let's say, $100 or $150 per trade, right? Because you have like multiple accounts, 20, 30, 40 accounts. You don't have to risk like $500. You could risk $100 and you have your return for the day.
Okay, I'm in the settings right now. I'm in inputs. Account size, what do I put?
Put 50,000.
50,000.
Yeah, put 50,000. Your risk, put it in USD.
Okay, risk is, it says 25 and it's in percent right now. USD, okay, I got that. Boom.
Now you can put like whatever risk you want. So depending on the trade that you're framing, let's say you want to risk $200,
so
right?
About 250 is what you say. Okay, 100 or 250, whatever.
Yeah, $100 or 250, whatever. That's your risk. That's like if price comes down to the stop loss, you're losing that much money.
Yeah. Okay.
So now in the quantity, once you do that, there's
it says leverage. What do I put for leverage?
Just leave it the way it is. It should be like it should be like 10,000.
Okay.
That doesn't matter. Yeah.
Yep.
So under style, go under style and put always show stats.
Always show stats. Okay.
Yeah. Uncheck the compact stats mode and uncheck the price labels.
Price labels. Okay.
Okay. So save that as a template.
Yep. I'm gonna do that right now.
Okay.
Save that. Long position. Save. Okay.
So you see the open P&L, and then it tells you the 115.50 or whatever the number is for you.
Okay, so 1 second. It says closed P&L. Why does yours say open? Why mine says closed?
You're probably like your stops are. Wait, I don't know.
Let me share my screen 1 second.
Yeah, share yours at the same time. Well, just to reiterate, like you see the quantity on the side next to it?
Sharing there. Let me bring it over to the other one so it's not blurry for you. I'll switch Discord to the other side. Okay. Can you see mine?
Yeah. Yeah, because it hit your stops. Move your thing more to the right. Yeah, see now it says open. So right. You see where it says quantity 2.11?
Yep.
So in that, if you're framing your trade and you have like it says quantity 2.11, you have your risk already set, you would risk 2 micros.
Okay.
Right? 2 micros, and then the low would be your risk that you put. How much did you put? You put
250, I think.
250? Okay, so that would be 250. So if it comes down and hits that, that's 250.
Yeah, if I entered right here.
If you entered right here, yeah.
Yeah. Okay.
So then you see your take profit at the top. It says the amount, target, and then amount. Yeah. So
Yeah.
that gives you your, because your baseline is 50,000. So then everything above 50,000 is your profit.
Okay. So 2 hour. Okay. 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 Got it. Got it. Got
Yeah.
it.
So 2R will be 500. See what I mean?
Hmm.
And then you take it one trade at a time. Like five, you hit your 2R, you're done for the day. Because that's like, if you're risking, if you're really like, if you know what you're doing, right? And if you're framing and you're being patient, you could hit a 2R and you're done, and that's already $500 per account if you're risking like 250.
See, this is sometimes this is where I let me go bring this to one. Okay. So, all right. So this is where sometimes I'm too quick at jumping the gun because it's like I just don't know how long that I'm supposed to wait sometimes. So it's like, all right, we created this 5 minute order block right here. Actually, right here. So oh shit. All right. So that doesn't give me a good example then. All right. So I would have had to wait to here.
Once it pushed up already, created the range, and then it came back down into it. You see that right next to it on the right, where it dipped down. You're looking at the wrong spot. That spot, yeah, that's where you would have entered.
Yeah. Is what I'm saying. Yeah. Because this is where sometimes you get tunnel vision, where it's like, all right, we created this fair value gap. Oh shoot, like we tapped into it. Looks like we're rejecting off of it. So I would like look to maybe buy here sometimes.
Mm-hmm.
But then I'm like in drawdown.
You're buying too soon.
Exactly. That's my issue. That's where I think I need to maybe stay out on the 15 minute.
Frame your trade on the 15 based off of the higher time frames as well. So like 4 hour,
So
1 hour, 15.
My bias comes from daily and 4 hour, but then go down to the 15 minute. Wait till I see order block created in the 15 minute.
Go down to the hourly too. You have to go down to the hourly as well, because don't forget about what I told you with the candles, right? Like the wick of the candle, on if you're profiling it, one time frame lower is going to be your swing point of that wick. So for example, on the daily, if you have the daily swing, like daily wick, it's going to be a 4 hour swing. So you see that daily candle, the wick
right here, yeah.
So go on the daily time frame real quick.
Yep.
So you have your wick, right? And now go on the 4 hour, and that same wick is a swing.
I gotta fix my shit here. Okay. Come here. Let me get rid of this too. Still there?
Yep.
Alright. So if I have my decision on the 4 hour,
Mm-hmm. So that
let's say I don't catch right away the move that happened in Asia, right?
uh-huh.
That's where sometimes I run into the issue is like if I already missed like the main move where it's like, all right, I would want to enter down here on the 5 minute because then my stop loss is not far away.
Mm-hmm.
But it's like, all right, I wake up this morning and I missed that, and I woke up at like 5 a.m. So it's like that's where sometimes I have an issue of like, all right, now where do I fucking enter? Like, enter off of the 15 minute, the 1 hour, like.
Well, you're always going to be entering off of the lower time frame. So 5, 3, 1 minute, like 15,
Yeah, like
5, 3, 1.
Where do I gain? Where do I look for my entry point first before I go down to the lower time frame to enter? Because let's say for example, if I'm just on the 5 or 15 minute, let's say I'm on the 5 minutes. Like, all right, well, there's an area that might look like a good entry point.
It has to follow your narrative for the higher time frame.
Yeah, let's say like I enter here a swing point on the 5 minute. and but then it's like boom, boom, I'm doing good, I'm doing good. Oh shit, like heavy retracement below my stop loss or below my shit because I wasn't zoomed out to like look at like the hourly, for example.
Yeah,
But
because
if I
you
look at
have
the
to
hourly, it's like, I should have waited for that to happen.
take your trades 1 hour at a time, right? So like every hourly candle, you're looking back to the higher time frame. You're looking, okay, this is the next hourly. Okay, this is the next hourly, and then you're zooming back into that hourly candle.
So if let's say I enter in at like 7:30.
Because there's an order to this, right? The order to it. Hold on, my bad.
Uh-huh.
My cat wanted to leave the room.
What you're saying is I should not be entering somewhere close to the end of an hour. I want to be entering at the beginning of an hour or in the middle of an hour, not towards the end, because that's where I could get fucked with the next candle,
Which
or the hourly.
could create your wick. Yeah.
Could create a fat wick, like we're looking right here at 11.
Yeah. So
or at 9.
you're most likely entering at the end of like an hour. At the top, right?
Mm-hmm.
So, I mean, look, there's an order to this, right? Like you have to go from top to bottom with this stuff. So, if you're framing the 4 hour, right, and you have your idea set on the 4 hour, then you go down to the 1 hour and see if that continues to follow your narrative, and if it does, you go down to the 15. And if it continues to, because you're going to catch the swings, those wicks on the hourly are going to be 15-minute swings.
Mm-hmm.
Right? So like look at this, for example. You see my screen?
Mm-hmm.
This is a 4 hour, right?
Yep.
Let me go on the hourly. So this 4 hour created the push down, and we already created that swing down here. So we're already like pushing up heavy on this. So we created the swing here. And then for a swing, there's a candle 1, candle 2, and then this would just be candle 3 continuation.
Mm-hmm.
So if I'm framing this as a swing, right, because this is coming off of the order block too. So this is a order block with a swing. So now if I'm looking at this at the hourly candles and I come down to the 15-minute, now those wicks are now swing points.
Mm-hmm. Mm-hmm.
You see? And now it's much easier to frame it. Okay, so now it's like, okay, I'm looking at this order block on the 15, and it's coming back down. Now I can zoom in more on the 1 minute, and it's still holding your main idea of the hourly. Like you're still holding that main idea. Oh, I'm looking for a continuation on the hourly. That's your idea. And you're coming down to catch the swings that are forming by framing it from the 15 down to the from the 1 hour down to the 15 down to the 1.
Mm-hmm. Was there an SMT at 9:30 that pushed down?
Most likely. Let me check. 9:30 was right here.
For that general area.
Yeah. So where's 9:30 here? Yeah, there was. So YM took the lows.
Yeah. Okay.
Right. So yeah, YM took the lows here. So there's an SMT like this. Not bad. This. So ES 9:30 here came down. This continued down, and this. Yeah. So there was no SMT between ES and Q, but there's one with YM.
Mm-hmm.
Yeah, exactly. Because this leg pushed down for YM, and we swept that low.
Mm-hmm.
And this one didn't. This one kept going up from here. So you have to frame it from the higher time frames, right? Like there's 6 4-hour candles in a day. I go 10 a.m. over here. That's the open of the 10. Right? But this already created the swing here too. See this swing on the 4-hour?
Mm-hmm. Yeah.
1, 2, and then this would be 3. If this is 1, this is 2, and a swing point is the characteristic, the description of a swing is the low, the starting point, the shift in the market, right? That's where the trends start. So if our trend is starting here, obviously our candle 3 will continue that trend.
Yeah, I was looking there for SMT this morning when we were around that area. I didn't see one.
This area here,
Yeah, that 7 or 6 in the morning, whatever it was.
we had one. Wait, did we?
No.
No,
Obviously.
no, we didn't. No, we didn't. We just had a swing point.
Yeah, that's what threw me off this morning when I like saw it bouncing off the Asia 50%. I was like
Uh-huh.
looking for SMT. I'm like, I don't see one. That's like I was a little unsure until I started seeing some more order blocks
Well, we
created.
technically did have the SMT because look, we had this bigger SMT here on the daily, like this sweep of the low like
Yeah.
this in the YM.
Yeah,
So we did.
That I knew. Yeah, that I knew we did. I just was looking for one there on retracement to like confirm me, like, oh, okay, like we're for sure going up right now, because up until that moment, because any SMT you don't know how much it's gonna go. There's no guarantee that this SMT is gonna push up 300 points or 30 points
Yeah,
or
but,
what.
but think about where we are off the daily
Yeah,
order
for
block.
sure.
You know.
Sure, but when we already pushed up from Asia, that like 200 something points or whatever it was, that's where it's like, all right, is that enough? And is it going to keep going down and retrace deeper? Because I was looking at the weekly, and if you look at the weekly, I was like, oh, we could still push down deeper on the weekly into like, closer to that order block on the weekly.
But we like before you even like, because I was framing it on the daily because we have a swing point to swing point
Okay.
at an order block here. So like we're reacting off of this point. The weekly we haven't even like created the swing and the highs yet.
Yeah, but again, this was like me at like 5 in the morning, 6 in the morning, where we had that fat 1 hour or 4 hour, whatever you want to call it, to the downside.
Like this is this is
Oh,
classic internal to external right now. Like we're just gonna keep pushing up.
Yep.
Like this was just a retracement back up. Because look, this wick again, this wick is a daily swing. See? Wick, swing. So weekly wick here is the weekly.
Yep.
Weekly wick, and this is the daily swing starting.
Yep.
So if this narrative holds, tomorrow I can expect to have
Bullish.
a small retracement, right? Small retracement, and then bullish continuation to the external. Plus tomorrow's Thursday, right? So I think by the time NFP hits, it's gonna trap people to come like this. NFP is gonna hit up here, and probably maybe dump. I don't know. I don't really care what NFP does. I let it pass through, and then I continue my trading based off of the data that it provides on the charts. Does that make sense though? Like what I'm explaining?
Yeah, it all makes very, very, very. My biggest issue, I think, is sometimes just entering too early. That's it.
Yeah, well, this is what journaling will help you with too. Okay, so like it'll put some structure into your routine, because when you're coming into like the journals, right? Let's say you like the way I told you to journal. It's gonna be you're already doing past data that already showed, right? So you're gonna be journaling candle by candle, right, off the daily. So for example, let me just remove all this. We're gonna do like this candle, for example.
Okay.
This Tuesday candle. So you come down to the 4 hour. Tuesday, where's Tuesday? Monday, 1800. Tuesday 10, 14, and then 18 here. Okay. So we opened up here Tuesday. So this candle high. To this low. So this range right here was the 4 hour of this daily candle that we're framing, right?
Mm-hmm.
So now you come down and you're like, okay, well, we opened up here 1800, right? If we look back, we have this SMT up here, right? This would
Mm-hmm.
you would put that in your journal, right? You're like, we're coming from an area where we're pushing down, right? So we're on the sell side of the curve here.
Mm-hmm.
So from here, we're pushing down, and my journaling is starting here, 1800. Okay, now I can come down. I can eat. Well, I mean, the 4 hour is very important. This is where you should like pay attention to a lot, because you're framing every candle and you're anticipating the next candle's move when you're actually trading, right? So like if you're drawing this out on your journal, you say, okay, well, we swept this high here, right?
Okay.
We're in a bearish trend here, so I'll just draw like an arrow like this. Bearish trend. We push down. Okay, this is a swing point up here, right? Swing point down to another swing point here, right? And then this is a fair value gap here on the 4 hour. So now your 4 hour framing is done. Now you come down off of this same idea that you just drew out, right? You come down to, actually the range is this, because this is the closest swing point.
Okay.
Right here.
Oh, yeah.
Yeah. So closest swing point here, we came up. Now my idea here on the 4 hour, I've just drew it out, right? So now I come down to the hourly.
That's Asia 1800 open, right?
Asia 1800 open, yeah. It's the new daily open. Every day opens at 1800.
Yeah.
Yeah. So now I'm like, okay, well, narrative is bearish. Now the hourly, I can see hour by hour candle. So there's 4 hourly candles in one 4 hour candle. Right? So now 1800, we push down heavy, right? Push down. 6 o'clock is over here. 9 o'clock is here. 10 o'clock opens up here. So now in my journal, I can put 10, because that's an important time for your trading. 10 o'clock. So what happens at 10? We're sweeping this high over here.
Hitting the fair value gap.
Yeah, exactly. Exactly. So now you're like, okay, well, at 10 o'clock, we had the reversal here. So this is a swing point. If I have a swing point, candle 1, candle 1, candle 2, and then candle 3 here, right? You can anticipate this candle, can you not?
Yeah.
Yeah, you can anticipate it, right? So it's like, if 11 opens up.
Well, this is where sometimes I get confused, because like, all right, we're hitting that fair value gap, but also this candle number 2 right here is coming down, tapped into that order block that was just created.
You're not looking at this order block anymore, because you're on the higher time frame bearish side of the curve.
Yeah. I'm on the sell side of the curve, so.
Yeah, so you disregard this order block, because you're following the narrative of the sells.
Yeah.
If you're gonna fuck yourself if you keep both sides of the curve. If you're like this and you're like, oh, well, maybe this, but maybe that, but maybe this, you're gonna fuck yourself. Like, look at the higher time frame. Look at where we're coming from.
Higher time frame, daily, weekly, 4 hour.
Weekly, daily, 4 hour. Yeah.
Yeah.
Yeah. So like higher time frame, we're pushing down. The narrative is bearish. Why would I fuck myself by being like, oh, I'm gonna try and find reasons for me not to take this, not to follow the order flow. The order flow is bearish. So just take what it gives you. So it's giving me this, right? 1, 2, 3. Now I can go down to the 15, right? Now every wick of that 15, every wick of that hour is a 15-minute swing.
Yep.
So now I can catch the swings going down, right?
Basically every hour.
Yeah. So you see all these swings going down?
Yep, those are all hour.
Yeah. So can you not anticipate yourself with a 1, 2, 3 swing and push down? 1, 2, 3 swing, push down. You can you could have caught like a 2R even if you missed this main move, like over here.
Yep.
Like this, right? You come down on that 1 minute and you frame it off the 15 swing, and you're like, okay, well, what do you see here on the 1 minute when you're watching it? You're like, well, we retrace up, and now the same pattern is forming, right? We have the. I'll move this to the side.
Yeah, can you draw out where the 2R is?
Yeah, hold on. So we have this is candle 2 here, and then this would be candle 3. And we have the buy side of the curve, and now we have the sell side of the curve. Well, what do you see happening here? We're creating more swings to the downside.
Yep.
Like this. So even if you're sitting here waiting, right, and you start seeing the swings forming here, and you start seeing the swings forming down, well, now you can frame yourself off of this, like let's say this candle 3. Keep your stops at a safe position, like up here, and now you can frame a 2R, like so, right? And just from the first push down, you already have your 2R.
Holy shit, okay.
You know what I mean?
Damn.
Just from the first push down, and you're not even in here for a long time. But you've already, like, you might think, oh, I missed the move. Well, did you really? Like, look at this. This is how much you need to make millions of dollars.
Yeah.
This is all you need, bro. Like, look. You have your frame, you have your narrative, like, framed out on the higher time frame. Now you just follow the order flow on the lower time frames. And if it keeps giving you your narrative from the higher time frames, you can capitalize, take your 2R and walk away. Because this was how long did this take? This took like for your 2R right here. This took 6 minutes, man. 6 minutes and you're out of here.
Yep.
Ciao bambino, up till next. If you really want to target the external, right, and capture a little bit more, you could target the external, right? Over here, because we're doing, like, if you're thinking about this from a long, like a higher time frame, we have a range, internal here, and now the external if we're following the bearish order flow. So this would be the target for the external, right? But this is 3R already as well, as you're pushing down.
Yeah.
If you're risking 250 on this, that's 700, 800 bucks. To the external. If you're hitting 2R over here, that's 500. 500, you're done. This is your weekly goal, right over here, risking 250. Obviously, I'm not going to tell you to risk 250. I'm going to tell you to risk 100. You know what I mean? Even once you have like more accounts, you can even go as far as risking 50 bucks. You know?
I'm setting my short position up again. Just like one. What is the lot size supposed to be again? 1,000?
Just one.
Oh, one. Okay.
Yeah.
And then risk USD and leverage is 10,000.
Yeah, go into style at the top.
Yep.
Always show stats. Yeah.
Yep.
Okay, save as template. You're good.
Short.
But you see what I'm saying, right? You see where I'm coming from? You don't try and jump in so quick. Frame your idea first, and then once he.
Sorry to cut you off.
Yeah, go ahead.
A lot of times I have my framework in there, but it's just I'm not huge. I need to force myself to keep drawing more shit out, which specifically
you
like
have to, bro. It's imperative.
I've been drawing all the lines out way more now, like open, previous daily high, previous daily low, weekly, all that stuff. But now, like I need to start using this tool with the long and short positions. Okay, like I see my order block created. Let me draw this out and let me wait until it taps into, either the short position, discount or premium or whatever, or vice versa, the discount area, and then buy off of that.
Well, you have to also you have to frame your trades based off of your high time frame, and then once you go down to the lower time frame, you have to frame it like you have to see the swing points forming and continuations, because this right here, it's totally following the narrative.
Yeah.
This one, even if you miss this one, let's say you miss this one and you have the retracement back up into this fair value gap, right? Right here, you want to be extra safe. You put it at the high of the candle here, and you aim for 2R. Well, you have your 2R. You still have your 2R. Look how quick this 2R is.
1 in 4 minutes, 5 minutes.
Yeah, like let's see how long. 3 minutes?
Yeah.
3 minutes. And still, even this, like what's happening here at the top? Do you see what's happening at the top?
We took the liquidity.
So what is this?
Yep.
Candle 1, candle 2.
Yep.
Let's say you miss this top move over here. You can anticipate this next candle, candle 3, to be the expansion candle down, right? So let's say you put your stop up here and you aim for 2R over here.
Still done in 3 minutes.
Still done in 3 minutes, and still caught your 2R, and you didn't miss the move. You're over here catching the 9:30 manipulation, and you're like, fuck, I missed the move of the day. I fucked myself. Well, look at all this. What time was this at? This was at 2 o'clock.
Yeah.
You know, this is the new 4-hour candle here that was created.
I don't know, like 15 opportunities.
You have, bro. There's like so many opportunities. Look at all this order flow.
Mm-hmm.
Look at the swing. There, every time it moves up, it creates a swing to push back down because it's shifting. It's shifting from bullish to bearish, bullish to bearish. Well, in order for it to shift, it has to do like what I told Dado. It has like a car, right? If a car is going on this side of the lane, well, in order for it to turn back, it has to do the shift and then come back, right? The 3-point turn.
Yeah.
That was a really bad 3-point turn. Like this, like that, and then come back, right? But that shift, that 3-point turn, that K turn or whatever, that's what you're looking for at the swing points. Because we're moving in one direction, and now we're shifting back to the other direction, right? We're moving in one direction, and now we're shifting back to the other direction. Well, we can't do that like off a whim. We have to have some type of logical pattern that it's going to form in order for us to do that shift, right? Because the candles, they move in a certain direction. It's like a remote control or whatever in a video game. Like you're playing GTA. Well, you can only move up, down, left, right, right? Up, down, left, right, R1 or 2, L1 or 2. Get all the cheats. But yeah, like there's a logic to this, right? So if we're starting to form that shift down, we're gonna look for the swing points. That's the start and end of a trend, right? Swing points. And then the SMTs are the cherries on top because it's gonna show you the direction. Oh, I'm on the right move. I'm on the right side. But yeah, you can catch your 2R and you're done for the day like that. Easy. Does that make more sense?
Yeah. I would say generally, like, I don't have a huge issue with. My issue is just a lot of times just entering maybe too early and not waiting for a liquidity sweep.
Well, you know how you fix that? You fix that by literally showing up every day and don't expect yourself to enter a position. Just watch. Literally, just sit there and watch, bro. Sit on your hands for like 2 weeks, a month. I told you a month. I would expect you to do that for a month, and that would give you the confidence to, okay, I can anticipate, I can see the move happening. Because once you see it unfold in front of you, you're going to be like, oh, wow, I could have capitalized on this. This was so easy. I saw it happen in front of my own eyes. I see the swing point. I see where we're tracing back internal. We're going to the external. And without the pressure of you entering a position, just watch. Just look at it and watch and analyze it like logically, you know? Like just be an observer. Because you're still participating in the markets by being an observer. You're still watching. Like it's not like you're losing off by not pushing the button. Like I think you're too antsy by trying to push the button. That's where it fucks you over. Like
yeah, because that's why I explained to Vince. It's like, dude, in every other fucking business in your life, we've been trained and formed into, if you're not doing anything, you're not being productive.
Yeah.
And so it's like, dude, like when I sit, you know, if I've sat for, 1 hour, 2 hours, 3 hours without entering a trade, it's like, dude, I feel like I'm not being productive. I'm not doing anything. Like.
Yeah, but you are.
I'm trying to rewire 33 years of fucking.
Yeah. But like, you are being productive by just observing.
Yeah. I know, but again, it's just It's
I get where you're coming from, but it's like that. There's a reason for that too, you know.
Yeah.
It's probably to keep people away from this and keep them like controlled. See this, like, swing points forming. This is the hourly.
Yep.
Go down to the 15.
And probably an SMT there.
Probably an SMT there. We're retracing back down. Yeah, there is an SMT. See? SMT.
Yep.
So you see how simple this is? Like you.
I do it. That I really feel my biggest issue is just being a little bit.
Bro, I'm telling you right now. I'm giving you the keys of how to fix that. You sit in front of the charts and you don't move. You don't move. Like sit in front of the charts. Don't move. Don't take any positions, and just frame it. Frame your trade ideas in your mind, and be like, okay, I see this anticipating. I see this moving. Okay, good. And then the next step would be, okay, I'm framing it like this now. You know what I mean?
Mm.
That's the next step, and you frame your 2R. And then you're like, oh shit, I'm actually like hitting my 2R, you know, like I'm framing good trades or whatever. Then the next step would be demoing. You go on a demo, but you do the demo where you pretend like it's a funded or like a real money, you know.
Yep. Yep.
So then you're entering low risk, $100, you know, $50, $100 risk.
Mm-hmm.
Just get used to being in the trade,
Mm-hmm.
because over time it won't matter how much you're risking as long as your trade idea is like good.
Yeah.
But it's a very easy fix, bro. Take the time to step back in order to move forward. You know, it's like your retracement.
Uh-huh.
Give
Feel good.
yourself the room to step back and watch and analyze. Give yourself like, bro, watch even after 2 weeks of just watching the charts, because I think 2 weeks is not long enough. You need like 4 weeks. Like 2 weeks, you'll see 1 week pass by, you'll see another week pass by, bro. Your whole fear of missing out will leave because it won't matter. You'll be like, I don't care about missing a move, bro. You know, look at how many moves I've missed. I don't give a shit.
Yeah.
You know what I mean? I don't care. I could miss the next week. I don't give a fuck.